Hi, this is Anthony. Welcome back to my show. So the question for the day is, am I lucky or am I smart? So I lucked out, and I'll say it's partly luck. April 22nd, I bought CoreWeave at $38.30 or 40 cents. Just slightly under the high of the day or the close of the day there. About 7 weeks later, on June 5th, right about there. Yeah. I sold for $137.74, about a $99 profit in about 7 weeks. Now that was in my Roth IRA, so it's tax free. I only had about $40 in cash in that account. The rest of it was already invested in other stocks. That's why I had enough money to buy one share of CoreWeave. Would I have bought more if I had more? Maybe. It was in the news that it kind of bumped up. It was kind of going sideways. It's dealing with AI and servers, so why not get in on the speculation? But let's look at what's happened since then. It's gone down. It was down 15% today. Is this a stock that you'll do well in the future? Maybe, but it's currently losing money. So unless you are only into momentum stocks, which you shouldn't be, but if that's what you're into, then buying and selling when it goes up, taking your profits, is one way to make some money in the stock market, although I think a well-diversified long-term portfolio is best. But if you're going to go into it, understand it's currently losing money here. There's a lockup about to expire. So a lockup means that people who own shares, employees, management, when a company goes IPO, initial public offering to the public, the people that own shares in the company or early investors that bought before it went public can't sell their shares right away. They have to wait a certain period of time. And so there may be a lot of people who, as they see the market going down for this, once they're able to sell their shares, might want to take some profits and sell, which could drive the price down even more. Okay, so if you are interested in this, be sure to do your own research, read the news from various sources, look at all the financials, do the fundamentals. I've been interested in the stock market since it dropped 22% in one day in 1987. I mean, I was interested in it before then. You can barely see that. Right there's the drop, right over here. 22% is a lot in one day, but in the long run, it barely shows up on this chart. So you can see it went sideways, or pretty much sideways for a long time here, a long time there. You need to be patient, but even taking into account for this drop, if you would have bought after the drop, or even at the height, you'd still be up about 3,000% in the past 40 years. So this shows an example of why holding for the long term should do pretty well for you. And don't panic when it drops or goes sideways for a while if you're in a broad-based mutual fund like this. So I'd love to hear from you. Again, this is not financial advice. I do a lot of videos about stocks, not financial advice, just entertainment. But I think that a few people could argue that my point of investing in well-diversified portfolios with a long-term horizon is usually going to do pretty well for people. Love to hear from you. If you haven't already, hit subscribe, hit like, leave a comment. I read them all, and I respond to them when I have a chance. Thank you so much. I really appreciate your time.